Hello, today is Thursday. It is the 21st day of March 2013. My name is Derek. Welcome to today's video showing silver up about 1 2/3 of a percentage point. So let's get on to the charts. This is the daily time frame. Obviously, we got the sideways movement. It has gotten above the 18 average of highs for the first time since back there, which means that there's really a couple levels of resistance. First one is this level here, and then you got this mark here. Nothing too big, but possibility, that's it. Just possibility that it might be breaking out of the range today and or tomorrow. The big volume occurred starting down here on this big red candle, and today's volume has been high. To see that, you need to look at a chart that has a volume with the silver futures contracts. Netdania does contain that, and that's the one that I use to view it. When I see volume coming from this down move and then doing a whole bunch of nothing, this indicates to me that the bottom is in or soon to be in, and a bull market should be starting fairly soon. Okay, so as far as what I did see for a bull market, a significant move, and then to either continue its significant move or to pull back, see this 18 average just barely start to rise, find support somewhere within that area, and then break resistance. That's the type of pattern that I'm looking for. Of course, if it just does something like, say, this, it keeps going, well, then obviously it still needs to find support. We can see here that, okay, you find support in this area, but it really didn't break past resistance, and then boom, down she went. So those are the things also to look out for. Now, the volatility today is actually over 2%, which is pretty much every day it gets over 2%. And the average is 2.21%. This is probably the lowest the average has been since 2003 for 100 periods. So let's take a look at this using the raw data. This is the site or the spreadsheet that I have. This is a daily for silver, so we can see this is the open, the high, the low, and the close. What I do is I take this number and subtract that one. I take the difference and I divide it by the low. That's the volatility. And the volatility percentages are right here. So today, 2.06%, 2, 3, 4, 5, 6, 7, 8. 8 consecutive sessions, and 12 out of the last 13 even containing under 2% volatility. That is just that doesn't happen. However, I checked the data again. This is the first time that we've had this long of a period, although we were one short of, I guess, the last record in 2003 with 9 sessions, under 2% going back to April 22nd, 2003. So we're seeing this micro volatility again. To me, this is a sign that the bear market is coming close to a conclusion. Let's finish this off within the S&P 500, a 3-week time frame. Each one of these candles representing 3 weeks worth of trading, and this is the 3rd week within the current one, so just a day and a half for it to finish. Within the Fibonacci retracement, I was basically saying, okay, I'm bearish here, I'm bearish here, but I haven't been bearish for a while because of how this Fibonacci retracement, even the running average from the high, has acted. You can see how it flattened out this running average here. You found resistance at this area, broke above it, found support at it, also finding support at this average, which is now rising, and a bull market. What I've also been saying is that a failed move is going to occur. I've been saying it pretty much since back in 2010, and either the selling to be a failed move or this rally to be a failed move. Right now, it's the selling that has been a failed move. Question is, will there be a fast move to follow? For me to see a fast move, I would need to see this thing at least double in about 3-4 years, maybe gain about 50% in about 3-4 months, something of that nature. I don't think that's going to be the case, but you know what? I don't know. Now, when you get inflationary problems or a dollar collapse situation, this thing can really go way high as the value of, course, fiat currency gets decimated. We're also back at this high. I said a couple other things that I said. One, that the debt ceiling issue was going to give us an early stock market retracement of 2013. And now that March is coming to a conclusion, early 2013 is pretty much coming to a conclusion as well. Yeah, you should have known. I've been doing some little bit of research about the debt ceiling, and it seems as if that the U.S. government decided to just not deal with it and just not do anything about it, not talk about it in the news. So everything is all fine. This selling that occurred back here was because of the debt ceiling issue of 2011. I also stated that a little while ago that when the Dow breaks past its '07 highs, roughly around where we are now, that the S&P 500 will come up towards its highs, that there should be a decent chance of some sort of retracement. But again, it could just be a retracement down to 1375, and then if it does something like this, then sometimes that's all you need, sort of like all it needed back here was a move from 1375 to 1100. And that is it. So thank you for tuning in, and I'll talk to you all later on. Bye-bye.